Hello and welcome to the market update from 15th to 19th July 2024. So let's start with the world economy. UPI is now active in UAE. AI Maya Supermart has conducted its inaugural transaction using UPI and it has announced that the acceptance of UPI payment across its outlet. News coming in from China, Beijing's National Bureau of Statistics said in a statement that GDP for their first quarter was 5.3% year on year, and for the second quarter was 4.7%. There was a high level Communist Party Central Committee, which was led by President Jinping, known as Plenum, which was held this week. The key highlights of this meeting was to improve social security, healthcare, and income distribution. They wanted to introduce land tax and financial system reforms. These tasks, which are expected to be completed by 2029, but they had not given any changes they intend to implement through these policies. Japan came out with their inflation number, which rose to 2.6% in the month of June. There was another news from Japan that the export grew in the month of June at a rate of 5.4% year on year, which was smaller than 6.4% increase that was expected, and it had cooled from 13.5% growth in the month of May. Japan also saw a record visitors coming in the month of June on the the yen has weakened. As the yen has weakened, they had witnessed approximately 3.14 million visitors in the year. Since the elections are all over the world, the last major elections that are supposed to be happened in the month of November is the US elections. So we try to analyze what Trump is giving through his speeches. So let's start with that. So on NATO, Ukraine, and European allies, he had said that he would ask Europe to reimburse the United States almost $200 billion worth of munition which was sent to Ukraine, and he's not committed to send any other aid to Eastern European countries if he is elected. On China trade and tariffs, Trump wants to introduce a Trump Reciprocal Trade Act, which would give him a broad discretion to ramp up retaliatory tariffs on countries when they are determined to put up a trade barrier of their own. He has also floated an idea of 10% unified tariff. If that would happen, then the international trade markets would be disrupted in a very big way. Also, the Reciprocal Trade Act would impact India, as India had been imposing a lot of restriction on a lot of products that are being imported from United States. On China, the Trump had threatened to implement major new tariffs or trade restrictions on China, as well as he had indicated some restriction on their European allies too. Coming to Mexico and the narcotics, he has said that he would designate a drug cartels operating out of Mexico as foreign terrorist organization, and would order Pentagon to make appropriate use of special forces to attack cartel leadership and infrastructure. This would definitely not be welcomed by the Mexican government. If we look, another point that he wanted on the conflict in the Israel, he had proposed that few policy solutions could be implemented. Besides saying he would be tougher on Iran, as it is closely linked to the groups classified by United States as the terrorist organization, which includes Hamas. On tax cuts, he would like to bring corporate tax rate down from the current tax rate of 21% to as low as 15%. If that target is too difficult to achieve, he would definitely would like to bring it down to 20%. He also wanted a new Treasury Secretary. JP Morgan CEO Jimmy Dimon could be the next Treasury Secretary if Trump is elected in this election. On defending Taiwan, he has his own skepticism on how to if United States could defend an island which is across the globe, as well as he also desired to see Taiwan pay US for its protection, because a lot of chip business is being done in Taiwan, and Trump is not happy with that. So now let's move to 10-year treasury bond yield. The 10-year treasury bond yield was trading at 4.2%, which is close to last week's also 4.1%. For the last since last April, the treasury bond yields have been above of 4%, I think. On the global market update, if we look at the for this week, the all the global markets were ended in a red. There were primarily two reasons. One was the downturn led in the technology stocks after there was this trade restriction imposed on the on selling of the chips to the Chinese market. So a lot of technology companies were in the red in this last week, including Nvidia. Another reason was there was an outage because of the outage on the Microsoft Azure platform, which was because of the which was led by the security update from a software company, which has turned skepticism and all the markets. You could see that the global markets, the US market, the European market, the Asian markets were all in red. Closed in reds. If you look at the oil prices for the week, the oil prices traded close to $82.56 a barrel, which was a bit lower from the last week's, which were trading at $84 or $85 a barrel. Gold came down by 0.37% and is trading at 73,000 per 10 grams. FIIs, after all the turmoil in the global markets, were still buying into Indian equity. They bought about 10,945 crores worth of Indian equity. DIIs, on the other hand, were the net sellers. They sold at about 4,226 crores worth of equity. Now let's look how the Indian markets were performing with the global turmoil and the FIIs buying and the DIIs selling. Indian markets did hit a peak, but after hitting a peak, they started to settle down, and Sensex and the broader index, Sensex and Nifty, was up by 0.112%. Nifty Bank was flattish actually at 0.03%. Nifty mid cap and small cap started showing very good weakness, and they had corrected by 2.2 to 2.9%. If you look at the PE valuation, Nifty 50 trailing PE is at 23.3, above 2 years average and below 5 years average. Nifty mid cap 150 trailing PE is at 42%, 42.2 at 2 years and 5 years high. Nifty small cap 100 trailing PE is at 29.3, mainly 2 years high and just above 5 years average. If you look at the Buffett indicator, that is the total market cap to GDP, it's the ratio is currently at 107.14, which shows that it's still moderately overvalued. So the Indian market is still trading in a slightly overvalued zone. If you look at the Indian bond markets, the Indian bond yields have been slightly stable, trading at 6.965%, buoyed by the large buying in the